Recently we attended the Macquarie conference. We attended it virtually. It's actually the biggest Australasian conference and it's been going for around 25 years now, and they usually get around 100 different corporates or different companies attending, so it's a really good indicator of how companies are tracking, and it's really well received and well attended by the market. I'll run through a few themes about what came out of the conference, but overall, definitely a lot more positive than last year, as you can imagine. We're in the middle of COVID. Now we're kind of 12 months ahead. A lot of trading updates that the companies gave were more positive, and they were able to give guidance and give an outlook, which in this kind of environment, giving investors that visibility was actually really well received from those companies that gave trading updates. And this kind of comes back to what we've seen over the course of this year so far with Australia. It's in kind of its strongest upgrade cycle. We've had 8 months now, I think, of consecutive earnings upgrades from companies, and it's the strongest upgrade cycle that we've seen since the last kind of commodity boom. So all in all, yeah, pretty positive. We're pretty positive on Australia, and that was kind of reiterated in the conference and the updates we got from companies. And one of the themes that came out of the conference, and probably the main theme, was just what we're seeing in terms of cost inflation, particularly across whether it's raw materials, labour. This was really reiterated in a number of updates that from companies. For example, shipping costs. We've probably all seen it. We've the delays in shipping. Shipping costs are actually up about 70% year on year, which can be a significant cost for companies when they're trying to, in terms of the impact on their margins. And we are in a healthy economic environment, so there is the ability for companies to pass on those costs. But it was definitely a prevalent theme that came through. It was just that inflation, the input price pressure that these companies are seeing. For example, Breville, we all know Breville, the consumer brand. They definitely called out the increased logistics costs that they're seeing. We've also seen a number of a bit of pressure on raw materials, and raw materials being more expensive. For example, with commodities, with the iron ore price is now at over $200 US a ton, which is a significant increase. And that's really starting to flow through to companies. There really wasn't a company that didn't call out kind of inflation in their presentation or their meeting. One company was an example of a company is Amcor, so they do a lot of packaging for goods. They definitely saw increases in their input prices. Building products companies, the likes of Reliance Worldwide, which does industrial products, they called it out. So we're really seeing it across a broad range of sectors and a broad range of companies. On the commodities side, like I said, the iron ore prices is very, very high at the moment, and that's off the back of this general reopening trend of the economy. It's off the back of the lack of supply and the increase in demand, really. And Biden's infrastructure plan, he got $3 trillion of infrastructure spending that he is adding to that demand side. So there's really that demand is outstripping supply, and that's leading to an increase in commodity prices. Another key theme was around the movement from COVID winners to what we call COVID losers, but I like to term them more vaccine winners. So it's seeing a change in investor sentiment and from companies that benefited during COVID. So think your kind of e-commerce companies with online shopping, companies like Fisher & Paykel Healthcare that benefited when there was increased hospitalizations, and moving into these COVID loser or vaccine beneficiary companies. For example, the travel companies, restaurant companies, casinos, companies that really benefit from the economy getting back to normal. And that was definitely a key theme that we saw coming through. It's definitely where the opportunity lies, is in those travel names, those global reopening names, and I think we're long-term investors, and that's where we're positioning our portfolios. Those companies are also they're trading at more appropriate valuations, and so we expect that kind of that discount in terms of the growth versus value to contract, as well as that earnings growth to come through. So we're really positive on those kind of those COVID losers or those vaccine beneficiary names going forward.